Hello, everybody. Thank you for staying awake this afternoon to listen to our topic, our panel discussion on accounting and taxation in the cannabis industry. My name is Matt Carnes. I'm the founder of Greenwave Advisors. I founded Greenwave in 2014. I am, by way of background, I'm also a CPA. I started my career in public accounting, then moved to Wall Street, was a buy-side analyst and a sell-side analyst, and then after that, I founded Greenwave. Really what we do is we provide independent financial research and analysis for the emerging cannabis industry. We also, most of our clients are family offices, hedge funds, and other accredited investors, and we help them through the due diligence process. So with that, I'd like to also pass it over to Jill and to Elena.
All right, thank you, Matt, and thank you, Gary, for having us here. This is a wonderful event. So happy to be here. My name is Jill Schur. I'm a tax partner at Markham LLP. I'm based in New York. And I have always been in the tax area where I service clients, companies, and individuals with their tax planning and to mitigate, their tax liability and to make sure they're taking advantage of deductions and credits that they could avail themselves of. At the same time, I also have been in the cannabis industry, and I'm very attracted to this cannabis industry because it's been such an underserved market, and there's so many opportunities here between the politics and the legislation and the science behind it. It's just an awesome industry to be in, and I'm so very happy to be doing this. Markham, by some background for Markham, the firm was established in the 1950s. We have grown very rapidly over the last couple of years. We have 3,000 professionals across the country, from California to New York and everywhere in between, basically, and overseas as well. We service every industry that there is, and our main functions are audit and tax, but we also do things like advisory, valuations, forensic work, litigation work. We have a Markham Tech practice that sells hardware and software to companies to help to implement their software and their ERP solutions and really get them set up. Our cannabis practice is very strong. We've always embraced this market. We have people that are dedicated to this field all throughout the United States. We service clients from the moment they get licensed, or when they want to get licensed and they're just thinking about it, all the way through public companies. And just so happy to be here and so happy to be part of this industry. And thank you, everyone.
Elena?
Hi, it's such a pleasure to be part of this accounting panel and to be here. My name is Elena Mervine. I'm a managing director of transaction advisory at Conresnick LLP. Conresnick is one of the top accounting, tax, and advisory firms in the United States. We have a very diverse industry experience and expertise that helps our clients seize growth opportunities. Our firm dates back to 1919 and currently has about 3,000 professionals in 30 offices nationwide. Conresnick was one of the first national CPA firms to launch cannabis practice in 2019, actually 18, and I have been part of that group ever since. The group that I belong to is Transaction Advisory, and this is the group that performs due diligence services on behalf of buyers, sellers, and lenders. We performed about 600 transactions last year, and most of the transactions, 50-50 split between buy-side and sell-side diligence, and we work with strategic clients as well as financials, which in the context of cannabis means multi-state operators as well as private equity cannabis funds, family offices, and lenders.
Both are very, very busy. You're going to be really busy in the next few years for sure. Just to give everybody some perspective, for those that are new to the industry, some perspective on sort of how the industry is developed. For all intent and purposes, The industry emerged in 2014 when Colorado implemented its first recreational use market. Prior to that, there was about, I would want to say about 11 states or so that just had medical only. The most significant was California and Michigan, very large markets, regulated, legal, but not regulated. So with that, we used to call a big accounting mess. It was able to, sort of transpire over the years. By way of market size, in 2014, the rec market, when Colorado implemented the first rec market, the total industry, including California and Michigan, was about $3 billion. Today, and that was about 11 states or so total. Today, we're at $25 billion, and north of 30 states that have some form of marijuana legalized. So, with all this, there are a lot of headwinds that are associated with operating a business that's federally illegal. And one of the most significant, I believe, is 280E, which I'll have you talk about. If you could just inform everybody what the obstacle is and the challenges of 280E.
Sure, absolutely. So Section 280E is actually part of the Internal Revenue Code, which houses, the Internal Revenue Code is all the sections that give the background behind, what taxes are due and, ultimately build up a tax return. Section 280E says that any controlled substance, any business that's involved in trafficking a controlled substance, you cannot deduct any expenses associated with that business or take any credits associated with it. The one exception is cost of goods sold. So for cannabis companies, since it's still federally illegal, even though a lot of states are coming out and they're legalizing adult use marijuana and medical marijuana, there still is this federal mandate that expenses are not deductible and credits are not given to these companies. Thus, it leads to a very complicated tax return. The only thing that's deductible is cost of goods sold. So a lot of these companies look to maximize their cost of goods sold deduction, and there's very specific, complex ways to do that. There, you have to have a very good tax advisor that can help you, or a good bookkeeper that can help you to set up your books in the right way to capture the expenses that will go into cost of goods sold. And it's different for every different level, every vertical in the industry. For example, a dispensary may have more deduction, actually less deductions, because they can only deduct the cost of what they buy to ultimately sell their inventory. When a cultivator can deduct, their seeds and other types of, expenses that go into making a product. So the calculation has to be done correctly, and there's a lot of complexity associated with this. And then you also have to look at the states. Every single state has different rules. Some states may allow you to have 280E deductions, or other states decouple from it, and you don't have to add back your 280E. So it's very, very complicated, and there could be a lot of risk and exposure associated with not doing it properly.
And with that risk, as you go in and you do your transaction reviews, I would think that honing in on 280E and that liability is a big part of what you do to attest to the valuation and the whole due diligence process. So could you walk us through some of the challenges or some of the red flags that you encounter, or that you could alert people to?
Absolutely. So from transaction perspective, 280E continues to be one of the single largest tax exposures and risk exposures in M&A or debt transactions. So from the standpoint of IRS, improving their guidance over the years, and IRS being successful in challenging any positions contrary to its guidance and various court wins, what happens is that the buyers are less and less willing to share any of the risks and in these transactions. Apart from the state-related taxes, state and other taxes, non-280E, where potentially calculated exposure will result in certain price adjustment, purchase price adjustment. In case with 280E, what happens is that people would establish escrow that will last up until the last relevant year, tax year remains closed, open to IRS audit. Another challenge would be, or red flag, is just cash flow projection impact. Companies tend to underestimate their 280E, and in terms of raising debt, transactions lenders would question how the company with underestimated, tax exposure, how will they be able to meet their debt obligations going forward. And Jill just mentioned the not only federal exposure, but also that risk also carries on to the state level, which also during the due diligence we kind of give a little bit of scrutiny as well. Jill just mentioned also the what we call aggressive 280E positions, when the company is intentionally kind of trying to minimize their tax bill, and they're doing that intentionally allocating some expenses to the COGS or inventory. So those accounts definitely get scrutinized during due diligence.
Yeah, and it's not like one size fits all, I'm sure. All your clients have different scenarios. Some are trying to push the envelope further than others.
Yeah.
It's a daunting task, I'm sure. But what compounds the whole issue and the whole risk factor is the fact that for the most part, most of these businesses are operating mostly in cash. So as an accountant, former auditor, I can only imagine the big mess that you walk into, particularly because certainly early on, not too many people were trained to be accountants. Like, they're walking in to an industry that's now legal. It's not like they were recruiting people from Procter & Gamble. Nobody was going to jeopardize their reputational risk to go work in a cannabis company. Hopefully that's changed over time. But as you walk in, and as I was saying, this last year was about $25 billion. If you add the taxes that are collected and everything else, the cultivation taxes, not everybody obviously is in all cash. Some are able to bank, but there's a lot of money floating around. So what challenges does that, bring to you in your job, in your effort? Elaine, start with Elaine and then talk about the tax issue.
Okay, so in terms of transactions and M&A, cash remains really the key account to be verified and validated. A lot of companies are not audited, so how would investors even rely on the internal financial statements? So the answer in cannabis and non-cannabis companies is always cash is part of the answer, where during due diligence we do proof of cash of revenue to your bank receipts. However, the added challenges within cannabis companies, obviously due to operating heavy in cash, where a lot of receipts are collected and deposited. There is a lag between collections and those receipts being deposited as a lump sum to the bank. Imagine for accountants, we can't see the transaction and the type of transaction, the nature of transaction, as whether that's a deposit from out of pocket or that's a revenue received, right? Then a lot of cash being kept in safe, and also cash being withdrawn and paid. Operators pay vendors, they cash on delivery terms, which also takes out a chunk of that cash from that chain that we're trying to reconcile. So that results in some significant red flags. And however, there is a mitigating factor, obviously, to deal with that. That's internal controls, strong internal controls, and track record, audit trail of all of the cash transactions to be maintained by the companies. I mean, unfortunately, there's no way around that.
Yeah, for sure. And when people go to pay their taxes, I mean, from your standpoint, Jill, what are the challenges of operating in all cash? I mean, are businesses having to actually take a suitcase of their cash and go to
That's a great question. Well, first I want to address the fact that when you're dealing with all cash, there's a lot of extra IRS requirements associated with that. There's a form called 8300, which is used to report a transaction where the company receives cash of over $10,000. Within 15 days of that receipt, it's very important that the company files the Form 8300. If it's not filed, the penalties could be up to $25,000 or more. And there could be also, it's not just civil penalties, it could be criminal penalties. You could actually go to jail. So these are things that have to be considered for a company that's operating in cash. Now, as far as IRS payments, so if a company is operating in cash and they have to make a payment to the IRS and they only have cash, there's actually an 800 number that they have to call the IRS and make an appointment to pay their taxes in cash. They have to bring it there, and they meet with someone, and it's counted, and that's how they do it. If the payment is over $10,000, you have to make an appointment well in advance. It could take 30 to 60 days, and you don't know where those IRS service centers are. They don't want to list out them on the website because they feel that the representatives that work there could be in danger, because there's always huge cash transactions. So you have to call in advance and understand where they are, which is kind of ironic because these companies sometimes are forced to operate in cash, and obviously there's concern for their safety. We hear things on the news all the time. But with the IRS, they take these extra measures to make sure that the representatives are safe.
Yeah, and talk about safe banking. So really, hopefully, that will change the landscape. In terms of a big risk is solvency is a big issue among cannabis companies because of the added cost of prohibition, the added taxes, and so forth. The IRS is seemingly becoming more aggressive in their audits, which I call the IRS the big snake in the grass. That's my pun.
That's so mean.
But so how are you dealing with the IRS? I mean, do you have a SWAT team?
We do. We actually do, and we do help companies when they do get entangled with the IRS. Of course, if they're companies of Markham, clients of Markham, we hope that they don't get into a mess. So what's happening is that the IRS is obviously short-staffed like much of the rest of the United States, and they have to allocate their human resources, their staff, to where they're going to get the biggest bang for their buck. In the cannabis industry, there was actually a study done that for 1 hour of manpower time from an IRS agent, they can receive up to $1,000, let's say, of tax, interest, and penalties in a mainstream type of industry. But in the cannabis industry, that same manpower, that same hour of manpower time would render $4,000. So that's 4 times the rate of return for the time invested by the IRS agent. So there's a lot of indications that the IRS is going to rev up their auditing. It's very important that companies have their bookkeeping sound, their documents sound, and they do this from inception. They have to have a really good chart of accounts to track their expenses, make sure that they're not deducting things that are not cost of goods sold, like marketing, advertising, rent, things like that. You have to be very, very diligent and careful. You have to have good advisors. And also, you have to consider not just the IRS, the tax exposure when you're going to have a transaction and you're going to get an adjustment to your purchase price, or you're going to have a huge escrow account that's going to sit there until the statute of limitations expires, like Elena said.
Yeah, there's a lot to it, and one other issue because of solvency. Some companies are going bankrupt. There's no bankruptcy protection. I would imagine the IRS ranks pretty high. Like if they were going to pull the plug and shut the lights off, and there's some money in the bank account, that would go to the IRS, correct?
Well, interestingly, the IRS will not seize the cannabis, because then the IRS, if they actually take the cannabis, right, then they're going to be operating in the controlled substance market. So
what do they do? Smoke it?
right, exactly. That's really a question for an attorney, though, as what the pecking order is. But if you are a lender, you have to make sure, see where you sit in this and make sure that the company is actually taking care of their exposure and calculating their taxable income correctly.
Okay, great. Okay. Well, I think we're out of time. Thank you, everyone. Thank you very much for listening to us and staying awake. Thank you.
Thank you.
Thank you.